Alright, so real quick, I said I was going to make a video on why I think Ethereum is going to start going back up. Alright, so I'm not going to go too much in detail because it's a pretty complicated subject, but basically what this is here is a weekly chart of Ethereum, which just means that each one of these candles, they're called candles for you guys that don't know, represent a week's worth of time. So I think this is like a year's worth of time. This pattern. So basically what this pattern is, it's called a bat pattern. You can look it up. It's basically an M or W type pattern that repeats itself in the market. So usually something like this. That's what a bat pattern looks like. I'm not going to go into like how to identify them and all that stuff. I'll teach that later in that course that I'm creating. But that's all you need to know for now. Right now, they're M and W type patterns that just repeat themselves. So basically, that's what we're seeing right now in Ethereum on a weekly basis. And okay, so this where it says D, basically this zone that I've highlighted is a combination of different Fibonacci numbers. That's what this pattern is. The reason why the pattern looks like an M and a W is that you can. This type of formation just naturally creates a zone where a lot of Fibonacci numbers line up. And again, a lot of you guys probably don't know what Fibonacci numbers are. You can look them up. I can't go and it'll take me forever to explain all of this in detail, but yeah, so basically a lot of Fibonacci numbers come together in this zone that I've highlighted. And I want you guys to look at this. So we look at the last couple of weeks. We see for those of you that don't know, look up how to read candlesticks. Basically, a red candlestick represents a lower close, meaning price opened up here, closed down there, so it lost value. A green candlestick represents a higher close, meaning price started here, closed up here, meaning an increase in value. So look, this week right here, we got a big red candle, meaning momentum to the downside. The next week, an even bigger one. Now look, as soon as price gets down to this level of confluence, meaning a level where a bunch of Fibonacci numbers line up, we get what's called a doji candle. And what that means is, what that means is that there is basically the buyers are fighting back. So what this candle tells us is that this is what's called a wick, that black line you see. So basically, price opened up here. It got down to as low as about 250, which is an important number. The 250 is like a psychological number. So it got down all the way down to 250, but it wasn't able to close all the way down here, meaning by the week's end, price reached all the way back up to almost 300. So what this candle tells us is that there's a large amount of buyers that are coming in right at the Fibonacci levels. Also, what you'll notice is that there's a lot of volume. Each one of these bars represents volume, which if you don't know what volume is, it's like the amount of buyers and sellers. So look, right on this week where you see the buyers starting to come in, there's a ton of volume as well. So what does that mean? It means that I think Ethereum is going to pause right here and start moving back up. Back up to where, you might ask? That's going to be what's called a 382 retracement. Again, it's a Fibonacci number. You can look it up. I can't really explain it here. But basically, back up to 700, which, yeah, sounds crazy, but that's how these patterns work. If you want to learn more about the patterns, I'll be teaching it. But if you want to really quickly learn, just look up Scott Carney harmonic patterns.